Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Here's Daimler, and Daimler is looking a lot like Deutsche Bank, I guess, where volatility peaked in that early 2009 period. Stock broke down in February 2010, and now recently it's just rallied right back. But volatility has gone nowhere here. Volatility at 30% seems to be much lower than it was a year or so ago. Here's the iShares MSCI Japan Index, and you'll notice that volatility is about 19%. And what does that mean? 19% means that the market's expecting a 19% move up or down over the next year in this EWJ. If you think the market's going to make a bigger move, you might want to be a buyer of an option, and if you think the market won't make that big of a move, you might want to be a seller of an option. Here's Toyota Motor and Toyota's vol. Interestingly enough, I think that me personally, I would have thought it would have been higher, 25%, considering all the bad press that it's getting all over the world. I would have thought volatility would be higher, and it's not. So it's interesting, 25% on the low side. Does that mean options are cheap and that you can't miss? Of course not. The stock might not move for a while. That's what the option traders are saying, and if you have a different view, that'd be a great reason to trade. PTR, PetroChina. We know, every day we read so much about what's happening in China. I would urge you to look at some of these Chinese stocks. You want to watch where the volatilities are. Volatility is down significantly, and just keep your eye on them. And when the volatility starts to peak up, that might give you a clue on what's happening. EWU, the iShares MSCI UK index, trying to make a new high. Volatility and seems to be bouncing along there. Here's the Chinese 25 index, and you see volatility significantly lower than where it was. The Russell 2000, we made a new high today, at least a 24-month high. Very interesting. What's happening with volatility? Well, at 19%, that is significantly lower than we have seen for a long period of time. And you see that by the bottom pane there. BP, more of the same. Asset moving up, volatility moving lower. Vodafone, again, more of the same. Novartis, we saw a huge pickup in volatility. Not sure what that was, probably news-driven. See that huge move right here? Maybe they weren't approved for a drug or something was going on, so you want to watch that. We see that that was just about 3 months or so ago. EWW, so it's the iShares MSCI Mexico Index, and volatility there is 22%, which means, again, market's expecting a 22% move up or down next year or the next calendar year. That's one standard deviation. EWZ, very popular. It's the Brazilian index, so everybody watches this one. Volatility is about 28%, and you want to keep your eye on that trend. We've sort of been neutral for many, many, many months now. PBR, one of my favorite stocks to watch because, again, oil and gas in Brazil is something that many people, the Brazilians are saying that it's something that they have to have, obviously, to grow their economy. And volatility there seems to be stable to maybe even picking up 34%. Again, I'd urge all of you to make your own decisions on this. But volatility is very, very helpful when you're looking at currencies. So I look at equities and currencies, and I go back and forth. Here's a metals and mining company, Vale. Stock made a new high, vol making a new low. And that's normally how it all works out. Banco Santander. Well, what happened when the stock rolled over January this year? I think you all know the answer. Volatility started to pick up. So how could you use this stuff? Well, if you believe that the stock was going to roll over, it might make sense to buy a put or a put spread because, again, you have something working for you. The volatility, if you believe volatility is going to move up, well, buying a put makes sense rather than selling a call. Because if you think volatility is going up, you want to benefit from the volatility change, that vega. I'm going to get more to that in just a few moments. Here's GLD. Gold made a new high late last year, and many are saying that it might do it again. It just recently had a couple-month breakout, and volatility is down at the 17% level. So somebody asked you, where do you think gold's going to be next year? Well, the appropriate answer, at least from the options market, would be up or down 17% from where it is today. Telefonica, TEF, stock broke down and volatility moved up. So again, there you see that relationship. You'll notice last fall, stock started breaking down here and volatility moved up. Not a lot though, but it did. Here are the Qs. The Qs in a major market rally, and when the market's rallying, normally, not always, we saw this in 1999, that when the market was rallying, options volatility was going up, but normally when you see rallies like this, volatility tends to move lower, and you see that by the bottom pane. I'm going to look at the next 6 charts are going to be, hopefully you'll be able to see it a little bit better, the recent volatility trends of some of the more active underlying securities, so whether they're ETFs or equities. The amber line is the 60-day implied volatility, and the blue line is the 60-day historical volatility, or the actual amount of movement from the underlier. So what happened? Well, we know Citigroup went through some wild gyrations in 2008, and then volatility actually started to move lower in March and then in April. So things, at least according to the options market, were getting better in April, and that might have been a clue to watch out and find other strategies. Maybe you had a long volatility strategy. You might have wanted to shift course and not be so long in volatility. And we've seen volatility dropping and now sort of a stabilization here. Now we don't know if that's going to last because, again, the market every day says it's just as likely for it to go up or down. So if you believe in trends, you might not believe in that. The second pane is the SPY. And you'll notice the SPY volatility, it's probably about 16% or so. It's been moving lower. It's still a bit higher than where it was a couple years ago. Here's IWM, same sort of relationship. So SPY and IWM, the vol's a little higher in IWM, a little bit. Bank America, very similar to Citigroup. Vol's a little lower, though, in Bank America. The Qs, so the Q vol is back to where it was a couple years ago. Does that mean it's cheap or expensive? That's up to all of us to decide. But it's nice to at least understand where it's been, and then you might have a view on where it's going. Intel, what's happening with volatility there? Well, vol's back down to its lower levels of a couple years ago.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.